You're now listening to the Tax Smart REI podcast, the number one tax podcast for real estate investors. Welcome back to the Tax Smart REI podcast. Today we're joined with Nathan Sosa, head of national tax here at Whole CPA, to break down the potential tax changes under the Trump administration that we might see in 2025. Will 100% bonus depreciation make a comeback? Could the $10,000 SALT cap be lifted? Will opportunity zones be extended? And will income taxes be eliminated by tariffs? We're going to see how this all plays out in this episode, so stick around. We'll be jumping into all that in just 60 seconds. Are you ready for the 2025 tax changes under the new administration? With new leadership in Washington, the tax landscape is shifting fast. These are some of the biggest updates we've seen in years, and if you're not proactive, you could be leaving thousands on the table. But don't stress, we've got exactly what you need. Access our exclusive 2025 tax changes resource, an in-depth tracker that breaks down what's new, what's changing, and the strategies that you need to stay ahead. This isn't just some generic checklist. It's a powerful and live resource tailored for real estate investors like you. Head on over to
All right, Nathan, thank you so much for joining us on the show today. I know you've been keeping close tabs on these 2025 tax changes and like almost like a play-by-play on how everything's going, so really excited to hear
in your pocket. That's www.therealestatecpa.com/2025 tax changes, because smart investors don't just make money, they know how to keep it. We'll see you over there, but right now, we'll jump right into today's episode.
All right, Nathan, thank you so much for joining us on the show today. I know you've been keeping close tabs on these 2025 tax changes and like almost like a play-by-play on how everything's going. So really excited to hear the news and latest updates. Before we kind of dive into what's going to change and will tariffs replace income taxes, can we just kind of talk about what do we stand to lose if no action is taken in 2025?
Hey, Tom, thanks for having me on today. Super excited. Yeah, I find this political piece of tax to be really intriguing and fun to talk about. But what do we stand to lose at the end of the day? Jason Smith, head of the Ways and Means Committee, and like, if you don't know who that is, Ways and Means Committee are the people who basically they do a lot of tax policy of the nation, right? They're the first ones everything starts with. They run through. We'll have a deeper discussion of that here in a little bit. But they came out and said that if the Tax Cuts and Jobs Act does not get extended, right, does not get extended through 2025 through 2026, that means that an average American will see a 22% tax increase if they don't. Right. So that's an average number, right? So like, that's like, it sounds scary, right? It's like, I'm going to lose $20 out of my next 100 extra, right? So like, what does that mean? So that's what we stand to lose. And essentially the reason why we stand to lose all of that is because back in 2017, Tax Cuts and Jobs Act initially brought down tax brackets. It decreased the rates overall. It increased a tiny bit at the top, at the upper rates, but for the lower rates, basically from a 24% down, it reduced them, right? We had quite a few more brackets that were needed to be considered. There's a lot more than 20%. Right now, we have 22%, 24% tax brackets at the moment. And then in between there is a 15%. And so right now, we have a much lower tax system than we've had prior. And so if these expire, that goes away, as does the standard deduction. That got doubled in 2017 as well. Everyone, if you're married, filing joint, you had a right now, you get a $24,000 deduction. Basically, the tax code just says, hey, this is the cost of living. We all know that's not the cost of living, but they say, hey, this is the cost of living. You get to deduct it. So standard deduction is one, because that means basically it'll get halved. So that will get halved. Another item to consider is those of you who are thinking about estate planning, other options you should really be thinking about this year and have communications with your estate planners or attorneys or tax advisors is the estate exemption. That gets halved. Right now, it is $14 million per spouse. So you can have up to $28 million that you could have exempted if you pass away. However, that's going to get halved and go back to normal rates. And so basically go back to where you could get a max of $14 million, that's a significant number at the end of the day. So there's a lot on the table here. QBI, qualified business income deductions. That deduction also expires then. So that's a free 20% tax rate for most business owners, and saying, hey, because the corporate rate got lowered, now you get a free 20% deduction too. That also goes away at the end of 2025. So there's a lot on the table we have to consider for as taxpayers, and there's a lot that needs to be taken care of. And that's why this current tax legislation fight is so important for Americans abroad.
Sounds like if no action is taken and some of these provisions that were in the Tax Cuts and Jobs Act, if they expire, it's going to lead to higher taxes.
Unfortunately, yes, it will lead to higher taxes. And for politicians, that's not good, especially when you are the party of lowering taxes and all of a sudden they vote you in and then now your tax rate gets increased. That doesn't end well politically for most folk.
it kind of sounds like that there's motivation to pass some type of legislation.
Highly motivated, isn't he? Is a good way to put that.
Okay. So I know there's been a lot of talk about this on the campaign trail in Congress. We've heard a lot. What are the potential changes that listeners of the show should expect to see? What's relevant for them? What do we think is going to happen in 2025?
Yeah, that's a great question, Tom. So a couple of weeks ago, after like a 5-hour long meeting with like the top tax writers between President Trump and the top tax writers in Congress, they basically, like, as they came out, they asked them, what are the priorities that are going to happen here? And President Trump said, I'm going to eliminate tax on tips. I'm going to eliminate tax on Social Security. I'm going to eliminate overtime pay. And additionally, I'm going to extend and make permanent the Trump tax cuts, is what they're calling, which is the Tax Cuts and Jobs Act, a bunch of the items that we just discussed. I'm going to increase the SALT cap, the state and local income tax deduction on for those who itemize. I'm going to increase that cap, and 100% bonus depreciation, which does get pass-through deduction and lower the corporate tax to 15% as well for American manufacturers. Those are his promises. What's relevant to real estate investors? It's going to be 100% bonus depreciation. It's going to be the qualified business income deduction. It's going to be raising the SALT cap, actually, right? For those of you who live in high income states, New York, New Jersey, California, it's a big boon for you. Sorry, Florida and Texas, but for property taxes actually for those folks. But anyone who lives in a high state tax state jurisdiction is going to benefit from a raised SALT cap. So we'll see what happens. Honestly, those first four I mentioned, the no tax on tips, no tax on OT, no tax on Social Security, that applies to Americans abroad. But we'll see if those are legitimate provisions that will actually get passed.
Yeah. I'm a little bit skeptical on how viable those are and whether or not that will happen. But really, I think let's just drill down to 100% bonus depreciation just a little bit, because we know that there was a bill passed by the House last year, right, that included 100% bonus depreciation through the end. I think it was the end of 2026. If I'm not mistaken, it was the end of 2025. But they wanted to bring it back. That was ultimately shot down in the Senate. But now I'm hearing some tax professionals believe that it might only go back to 50%. What do you think is the most likely outcome? Is it going to go back to 100, or will it be something else?
No, it's a great question, Tom. And so it's a tricky situation. Right now, every projection that's being done from economists, the Congress Budget Office, the Congressional Budget Office, they're the ones who do the scoring and estimate and saying, hey, this is how much deficit of revenue the government's not going to earn, right? Because whenever you do implement a provision like bonus depreciation, that means you're not getting as much in tax now, because you've allowed taxpayers, real estate investors to write off more of their income, so they're going to pay less in tax. And so they've scored that the cost of 100%, but they have not scored it as a 50% bonus depreciation, 60% bonus depreciation. They've scored it as 100% bonus depreciation. I know I listened to a Ways and Means Committee open hearing that they had a couple weeks ago, and they had mentioned immediate expensing, which is 100% bonus depreciation. Very much want to bring that back, and that's what they mentioned when they said they want to bring back the Tax Cuts and Jobs Act. That's what they're talking about and referring to. They want to bring back 100% bonus depreciation. Now, the caveat is the later we go in this year for tax legislation, the more difficult it might wind up being to get 100% for a long period of time. So that's what's going to be the key delineation. Look, if they can get this done fast and get it done maybe this summer, early fall, I definitely think 100% bonus depreciation can come back. If it continues to carry and drag and all of a sudden we see ourselves sitting in November, December, I feel like 100% bonus depreciation might not be as realistic.
Realistic for 2025 or realistic going forward?
I think going forward. I think going forward it could be difficult because they just got so much in this package they have to think about. We can talk a little bit about how everything's scored and looked at. I mean, as of right now, so the overall cost of bringing back 100% bonus depreciation only costs $378 billion. So it's actually, I say $378 billion, that's just a small number, right? You can just throw around. It's just pennies on the dollar, right? But actually, in terms of all the other provisions, it's actually rather small. So if you completely eliminate SALT cap or remove the cap out is what I'm trying to say, if you completely remove the cap, that would cost $1.2 trillion. So that's definitely not going to happen because that provision is just far too expensive. Now, $378 billion for 100% bonus depreciation and what is actually viewed as bipartisan across the board, right? Like you mentioned last year's bill, the Tax Relief Act or whatever that was the Republicans called it, had bipartisan support on both sides. And so it is definitely a favorable bill. And I definitely think 100% bonus depreciation is one of the top goals. Here's how I order the priorities for Congress, right? I'm sorry, I will toss President Trump's priorities out of here, but Congress's priorities are to return anything individual, any individual tax rate, standard deduction, that's essentially a lock. That is going to happen in 2025. You can mark me on it. You can come to me in 6 and 8 months. And if I'm wrong, let me know. But that is going to for sure get passed this year. But what's next? Actually, I feel like qualified business income is second on their priority list, actually, which is another individual provision, but it feels separate in my opinion. I think that 20% deduction, that's also a lock for 2025 as well to come back. The next one on the list is 100% bonus depreciation. And again, it is a significant less cost. So it kind of just feels like a freebie that you can give almost, because it's only $378 billion. Stupid number. But I really feel like 100% bonus depreciation has a very solid chance of returning due to its overall cost over a 10-year period. Because that's how they're all being scored currently.
With 2024 officially in the rearview mirror, now's the perfect time to start planning for how you're going to maximize your tax savings in 2025. With major tax changes looming under the new administration and IRS audits on the rise, navigating the tax code alone is now riskier than ever. Whether you're leveraging the short-term rental loophole, claiming the real estate professional status, utilizing passive losses, 1031 exchanges, or anything in between, our expert team of tax advisors at Hall CPA has your back. We'll help you uncover hidden opportunities and avoid costly mistakes that could put you at risk during an audit. With potentially tens of thousands of dollars of tax savings on the line, why wait? Visit www.therealestatecpa.com/podcast to request your free 30-minute discovery call today. Again, that's www.therealestatecpa.com/podcast for a free consultation. Let's help you ensure you keep more of what you earn in 2025. That's all for now, and we'll dive right back into today's episode.
Okay, perfect. I know a lot of people are tuning in right now. Right, 100% bonus depreciation is major, and it has been very powerful. So I think we're all hoping it comes back. It looks like there's a good chance. Before we move on a little bit, drill down a little bit more into timing and when we expect how we expect this stuff to get passed. Can we just talk about carried interest, right? That impacts some of the syndicators who might be tuning in. Maybe you're on the general sponsorship side, or you're general partner, or maybe you're on the sponsorship side, or maybe even as a limited partner, they need to understand how that might impact their investments perhaps in the future. So what is carried interest exactly? And I guess it's on the chopping block. It's considered to be a loophole that's going to be closed. What do you see going on there?
Yeah, so that's a great point, Tom. It's like carried interest somehow always winds up in the mouths of every congressman saying, we're going to get rid of it. This loophole will be done away with. It's going to be gone. And President Trump listed it. I listed the taxes he wants to erase or lower, and I did not mention the fact that he specifically called out removing carried interest and then oddly removing sports franchise owners' business deductions. I don't know what that means. Everyone's trying to figure that one out still, but we'll see what happens there. But carried interest specifically, that actually only raises about $12 billion of revenue, oddly enough. It's not a significant raise. It's a tiny, tiny raise. So it's like, okay, can they do it? Sure, they could. In 2017, they suggested doing it, but then they just ended up having a longer 3-year holding period. But that 3-year holding period didn't even apply to real estate, right? It didn't even apply to real estate at the end of the day. It just applied to other hedge fund owners. And so I think there might be some modifications to carries. Maybe real estate has to hold for 3 years now too. Maybe it's a 5-year hold period. I don't know. I imagine that they'll tweak it just so they can somewhat keep the political promise, but I don't truly expect a large adjustment.
Yeah, it's really interesting how some of these things catch a lot of headlines, and yet the impact, it's almost like it catches headlines, gets people going, but the overall impact is just very minor, like 12 billion. I would expect the amount of attention that carried interest gets, that every single time you turn around, right? Every new tax bill, they talk about it a little bit, just for the impact to only be 12 billion. It's just like, why bother? Right?
Yeah, I know, right? Yeah, $12 billion is nothing, Tom. I'm going to give that in your bank account.
In the grand scheme of things, it's just totally. It's not moving the needle tremendously. Meanwhile, 100% bonus depreciation has a $308 billion impact, perhaps you mentioned. Mm-hmm. That's significant. That seems to have more support, believe it or not, or at least in the headlines. So switching gears a little bit into timing, right? We've heard mixed signals over the last few months. I remember at first the White House, they wanted to do it ASAP, right? And that stated they want to do it as soon as possible. And then initially after the election, I heard that this stuff was going to get done in one reconciliation bill within the first 100 days. Now, later on, I heard chatter about 2 budget reconciliation bills because so much stuff needs to get packed in there. And it's going to be taken part over two bills with taxes being in the latter part of the year in that second bill. What's going on today? Where do we stand?
Yeah, initially we took many representatives wrote letters saying we're going to have tax, border, immigration, armed forces. We're going to have all these bills done in 100 days in Congress. It's going to be done and over with, and we're going to be taken care of. And now we've approached I call it the dueling houses, because right now the House has a lot of budget deficit hawks. And essentially what they're saying is that like our current government's debt is so insanely massive that we can't allow these, that we can't just like continue to not do things that stimulate the economy and continue to add on to that debt. We have to be more careful and be more judicious in what we spend, what we don't. And then on the flip, so there's a lot that needs to be kind of like neatly navigated over in the House, because the margins are also significantly smaller. All it takes is one vote in the House, and then like now nothing gets passed. All it takes is one Republican House representative to flip, and they're done. They cannot pass this bill. But on the flip side, the Senate has a much healthier majority and much stronger majority. Normally, how this process works is the House will start the budget resolution, and then the Senate will start a simultaneous one, because everything has to technically start in the House. And so they have to go and do their process, and then the Senate will follow their lead. The House was taking a while and trying to get all of its party members in one agreement or in line together. The Senate basically got impatient. And so they said, we're just going to do our own, and we're going to take care of it. It actually did motivate the House, and they said, hey, okay, fine, we're doing our budget resolution now. And so they were like a few days after the Senate passed their budget resolution, the House then passed theirs. However, the House is on recess this week. The Senate is not. So they'll be voting on their budget resolution. And I don't think I explained budget resolution either. So I'll try to make this 30 seconds or less. But essentially, to pass tax bills now, you have to go through a process that's called budget reconciliation. And the reason this is it avoids the filibuster and Byrd rule in the Senate. Basically, instead of having 60 majority of senators who vote on a bill, because we're so closely narrowed in this country now when it comes to Republicans versus Democrats, where you need 60 members, you're never going to get 60 members. However, you have 53 majority. If you go through budget reconciliation process, you can actually avoid this and just have the majority in the Senate. However, the key point here is that limits you, because you can only work in a 10-year span. So the costs have to be considered for over a 10-year budget. You can't do things quote unquote permanently. Now there's a little bit of a workaround, actually a loophole that the Senate is trying to go through. But most things need to start in the House. They start in the Ways and Means Committee. We mentioned them a little bit earlier. They're the ones who do tax stuff. And so essentially what's happening now is the Senate's impatient and doesn't want to wait on the House. And so they have a two-bill approach, right? The House has the one big, beautiful bill that President Trump touted approach. They want to get tax, immigration, border, and security all done in one bill. While on the flip side, Senate wants to do a skinny resolution, give the presidency a big win right now, and just do border, immigration, and military. That's what they want to do. Their funding, they'll leave tax for later, right? Because right now, they have two budget reconciliation bills. They can do 2025 and 2026. The deadline for the 2025 budget reconciliation bill is September 30th. So there's a little bit of movement and a little bit of pressure on Congress, right? Congress will take as much time as it wants, but this creates a lot of pressure. And that's what the House is trying to do. They're trying to say, we want this done by September 30th, which is a feature, not a bug, right? Like the fact you have Congress deadlines is actually a good thing. Now, right after the House passed their budget resolution, basically 10 senators came out and said, we're not going to support that when it comes to our way. We're not going to vote on it. And then simultaneously, the House has also said, when the Senate's bill comes to our side, we're not going to support it. Won't even hit the floor. So we're kind of at an impasse on both sides. We'll see who wins ultimately, right? Because neither wants to give and neither wants to budge. So we'll see what happens there. I fully expect this to come at best September 30th, right? Guys, that's the deadline. So that'd be the earliest case scenario, in my opinion. Worst case scenario, January 1st, 2026 could potentially be an option for us here, which that would not be ideal, but I think that could be when this winds up happening.
Long story short, you don't foresee it happening any earlier than September 30th.
I don't. No, I really don't. I don't see that happening. There's too much going on, and I truly don't expect that. The House is already on recess this week. I don't expect them to move faster. Maybe summer would be a shock to me if that happened. I expect August, September is when this actually get through.
Okay, and if it went all the way out to 2026, it was January. In that scenario, you foresee there being a lesser of a chance of 100% bonus depreciation making it into that bill?
I think so. But however, if we go to September, that's because we're doing it the House's way. If we go to December, January, that means we've gone the Senate route. And so if we go the Senate route, they actually have said that they want to do a baseline policy. And basically what that means is like all these provisions that already exist are like, we don't actually have to pay for those. They just exist, they are. And so we don't have to worry about paying for any of that. So 100% bonus depreciation, all these numbers that I've been throwing out, like in the billions, trillions that I've thrown out thus far, they say, yeah, that's actually not a cost. That doesn't hurt our GDP or anything like that. There's no deficit of revenue there. So actually, there's a chance that we can still get 100% bonus depreciation. I do think that with the House has a slimmer majority, so they have to be able to pass it. So the budget deficit hawks are always going to nip at certain provisions, and it might just nip bonus depreciation down just enough.
Got it. Okay. Anything else we need to know about timing here? Anything else you think is important to highlight, or you think we?
I don't think there's that much to know. I think if you want a summer bill, you're going to be disappointed, and if you want a September bill, there's also a high chance you're going to be disappointed too.
All right. So one last question along this line. I know people are thinking about it. Should people be extending their tax returns right now, hoping 100% bonus depreciation comes back for 2024, or should they just file their tax?
Tom and I are laughing at this because we know how ridiculous that provision is. Like, I'm sorry, if you think that income tax is going away this year, it's not going to happen. The government gets over 50% of its revenue from income tax. Tariffs would only replace maybe 25% of that, right? That's like, as it's been promised, like, hey, we're just going to replace income tax, get rid of it, and we're just have tariffs. For the economists and the very smart people who do this stuff, they say that tariffs are great from a leverage perspective. They don't produce a lot of income. They actually pass a lot of costs down to other taxpayers at the end of the day. So I would not extend your tax return and hoping that you won't have to pay tax this year.
Okay, so long story short, tariffs are not going to place income tax anytime soon.
Don't see that happening, Tom, personally.
Okay, so let's talk about what's going on with D.O.G.E, right? Because we know that some of these tax provisions that if they're extended, like we talked about throughout this episode, that it's going to increase the deficit. So some of the ways they're trying to offset the deficit, if I'm not mistaken, is through D.O.G.E. What's going on with D.O.G.E right now? What do we need to know?
Yeah, D.O.G.E is a lot going on. D.O.G.E is a lot going on politically. If you're on X, you'll be well aware of all the changes that are happening at D.O.G.E. One, in terms for real estate investors specifically, is they went into the IRS building last week, and they have potentially, I've not seen this confirmed yet. Last week, it was mentioned that maybe 15,000 IRS agents were going to be fired. Well, I still haven't seen any news on that as of yet, so we'll see. I forgot it was President's Day yesterday, so that might happen later today or tomorrow. That news might get released. And so D.O.G.E is looking to cut costs and make efficiencies. So that could be good for the IRS, potentially. I don't know if getting rid of the organizations that's already low staffed, I don't know if that'll help, but maybe we could get some great efficiencies from D.O.G.E and Elon Musk and his team. They could help us there. They're supposed to be looking for quote unquote government waste in general to help pay for the tax bill that will be coming, right? It's supposed to cost about $4.5 trillion. And so they have to look for $1 trillion of cuts on D.O.G.E side and government waste to help pay for it. We'll see what's happening there. Like D.O.G.E tweeted, it's like, what kind of adjustments would you want to see happening to the IRS? Paper checks was a big one. It's like getting rid of paper checks completely, which if we can find an efficient way to do that, great. I don't know if there's an efficient way to do that, Tom.
Yeah, I feel like there's so much waste though in terms of like with the IRS. I remember this year they mailed me a check and I'm like, why are they mailing me this check? Can't they just deposit the check? I mean, there's other things too. I feel like a lot of things within the government can be made more efficient with modern day technology, whether it's AI or just not even AI, honestly. It's just like basic stuff that we've all been using in the business world for the last 10, 15 years. They just apply it to the government. Things will be a lot more efficient.
I hope so. I hope that's what D.O.G.E does. I hope they just basically hey, here's a computer from just 2005 versus the 1950s computer they're working on, right? If we do that, everything's going to run a lot faster.
Yeah, I mean, even the tax preparation software, I know this obviously isn't D.O.G.E, but just kind of goes to show you how far things are. I feel like the current tax preparation software, a lot of it feels like it was built on Windows 95 or 98. It would belong on those platforms. But anyway, yeah, I mean, there's a lot going on within the government right now. D.O.G.E is cutting out a government waste. Hopefully that'll help cover some of the spending bill. 100% bonus depreciation sounds like it's going to be making a comeback. We got our fingers crossed. September 30th. Hopefully we see that. What else have we not covered right now? You think people need to know about 2025 tax changes?
Yeah, Tom, I definitely think that we've talked a lot about raising the SALT cap, right? Raising it or eliminating it. It has been discussed completely eliminating SALT deductions in general, and not just for individuals, also business taxpayers as well. So basically, no one gets to deduct state income tax any longer. Is that no longer that could potentially be on the chopping block? It provides a ton of space and revenue to allow for all these things to happen. So I can't confirm if that's for sure going to happen, but I definitely think it's an option that they're considering. We'll see what happens. I really think by the end of February, we'll have a little bit better picture of what direction everything's going to be going. But we'll see, like, it requires the House to be in session, and we'll see what the Senate ultimately tries to do if they try to push their brethren into line.
That's interesting. So on one side, they want to raise perhaps 20,000, I heard, or perhaps even like eliminate the cap itself, right? But then on the other side, it's like they're trying to eliminate it, like the deduction completely, like meaning
completely.
Zero,
Yeah.
Yeah.
Yeah. I mean, that like all businesses. So one thing that a lot of real estate investors who might have used is the PTET deductions, pass-through entity tax deductions, where you did make like you basically, like, you elect into your state to pay forward taxes essentially, and you make the deduction. I definitely think that's going to be gone. That's going to be used as a pay for this year. So if that's something you used, I'm sorry, but I don't think that's going to be allowed going forward after 2025.
All right, so we talked a lot about 2025 changes, what could be coming, what might be coming. There's still some unknowns. We don't know exactly the timings, when all the pins are going to drop, so to speak. Where's the best way? I know we have a lot of resources on this. What's the best resource that our listeners can get that can help them keep up to date with what's going on, all these tax changes?
Yeah, so I would highly recommend logging on to our 2025 tracker at Hall CPA. It's an awesome way to do that. We'll be posting updates constantly and consistently. Also, give me a follow on X, formerly Twitter, or LinkedIn, and I'm posting pretty much daily, at minimum weekly, on what's going on and what's going on in the government. If there's an announcement that's made, you'll hear it from me first before you hear it from anywhere else.
Yeah, absolutely. We do have that tax tracker that Nathan just mentioned. You can get that at www.therealestatecpa.com/2025 tax changes. You can also join our new newsletter that we'll be putting out. We'll be giving everybody up to date with the latest information on 2025 tax changes on that newsletter. You can also get that at the same page, which again, therealestatecpa.com/2025 tax changes, and we'll add you to that newsletter as well so that you don't miss a beat. With all that being said, if you are looking for proactive tax advice on how you can use these changes to your advantage and everything else that's currently in place within the tax code, we'd love to learn more about your situation and how we can help you come up with a tax plan that'll help you reduce your tax bills. So you can learn more and request a free discovery call at www.therealestatecpa.com/podcasts. And we will see you on the next episode of the Tax 1 RIA podcast.